Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the cannabis sector. So first up is ticker symbol MJ. So let's look at the alternative harvest ETF here. Basically it's been pulling back for 3 days in a row, but it is hitting the key support level. So right now it's hitting the 200, 300, and 400 day simple moving averages. That's the red, blue, and black lines. Okay, so as long as they hold, this is where it could get the technical bounce. So you want to see it stay above this 30.85 level. If that were to break, it could come down here and test the 29 level, which was the low close on the 29th. So it's going to be really important that it holds support here. If support does hold here and it forms a bullish pattern, what we're looking for is a break back above the 100-day simple moving average at 32.61. That's the gold line here. Once back above that level, then it needs to get back above the middle Bollinger Band at 33.88. Once that level turns into support, it can get a new uptrend going. It tried to turn the middle Bollinger Band into support back here on the 7th, but it failed to hold and it pulled back. So it's going to be real important now. It holds this 31 support level. Okay, let's look at CGC here. So yeah, this formed an interesting pattern today. It pulled back for 2 days in a row, and then today it formed a black candle. Notice the lower wick on the candle that shows loading off of low of day. And today a bullish reversal pattern formed, bullish homing pigeon. Okay, so you have the black candle inside the previous red candle, and that's signaling that it could bounce here. It's holding the 100-day simple moving average. That was the key level to hold at 38.78. As long as that level holds, this is a good bounce level. Now, if it were to break, it could come back down here and test that 200-day simple moving average support zone. You know, down here in that 33 low close level from the 29th. That would be the downside risk if the gold line failed to hold the 100-day simple moving average. As long as it holds, what you're looking for is a break back above this middle Bollinger Band at 41.28. Just like MJ, you know, this closed above the middle Bollinger Band last week, but it failed to hold and it pulled back. So once it closes back above that level, many times the second time, that's where, okay, it's turning into support, and that's where it can head higher. And then you want to see a break back above that 50-day simple moving average at 46.52. So just to make it really easy, you know, trading above 41, 41.25, that's going to signal upside potential, and then trading below 39, below 38.78, that's going to signal downside risk. Okay, let's look at Aurora Cannabis here. So yeah, so it's pulled back as well. All the cannabis sector stocks have pulled back the last couple of days, or most all of them. Shouldn't say all of them, but most of them have, and these top ones have for sure. And so yeah, as you can see, the 3-day pullback has led it back to that 300-day simple moving average at 6.48. That's the big level to hold. You know, that's what it held the support zone the last time in October. I know it dropped below and it tested that 400 simple moving average at 5.28. The risk is if the 650 support zone fails to hold, it does come down here to that 550, 525 level to retest that 400 simple moving average. Now if it can, right now it's trying to hold all these moving averages that are converged. The red and gold lines here, you notice how they've come together. Notice how the gold line is at 718 and the red line is at 724. Well, having the gold line is getting ready to cross over that red line. You know, that's a signal that the chart has been building strength. You know, you had the crossover here with the 50 above the 100, and then right here you had what we call the golden cross. This is where the 50-day simple moving average crossed over the 200-day simple moving average back in August. And so the key is to get back above that 50-day simple moving average. Once it's back above that level, that's going to be the signal the bulls are back in full control and it can head higher. Okay, let's look at APHA here. Closed down 8%. So yeah, APHA, once again failed to hold that middle Bollinger Band. The doji candlestick here on the 7th was your clue that it was pulling back. You know, you had multiple white candles, gap up open, doji. Many times you'll get a pullback. Now the middle Bollinger Band failed to hold, and it's trying to hold the 100-day simple moving average at 1130. If it can hold that 1130 level, it needs to get back above the middle Bollinger Band at 1238. You know, like the other stocks that I just mentioned, if it can get back above that level, that's where it can turn it into support and possibly get back above that 50-day simple moving average at 1372. Now, if it fails to hold the 1130 level and it drops below this 100-day simple moving average tomorrow, it could come down here and test the 200 and 300-day simple moving averages in the 1010 to 1056 support zone. If you look here on the 29th when it had the pullback, it did come all the way down here into this 970 zone. So on a big pullback, you could see that lower Bollinger Band tested down at 970. So once again, real important it holds the 100-day simple moving average, and real important it gets back above the middle Bollinger Band. Going forward for these stocks that are in this situation, you know, with this setup, you know, it's the break above resistance here signals upside potential. A break below resistance signals downside risk, continuation of the downtrend. Okay, let's look at TLRY here. It's been working on working its way higher. It did close up 4% today. Right now, it's hitting the key level to break, which is that middle Bollinger Band. Once again, the middle Bollinger Band is also the 20-day simple moving average. And notice it's just below that 50-day simple moving average. And so those are the two levels to break. It has to get above 116.73, and then it has to get above the green line here, which is at 123.26. Once above both levels and they turn into support, that's where it can head higher. Back here last week on the 7th, it got above both levels, but they failed to hold and it quickly pulled back. As long as there are resistance, you know, that does signal that it could consolidate, could pull back. I would really keep an eye on EMAs 4, 8, and 13 over here. And yeah, if you see it drop below the lowest moving average, which is EMA 8 at you know, basically 112.50, that's going to signal downside risk. It needs to hold 112.50. Trading below 112.50 is going to signal possible pullback lower. Trading above 116.75 is going to signal upside potential, and it could run to 123, but fail to turn 123 into support, and it would, you know, likely continue consolidating. Okay, let's look at Cronus Group here. So it pulled back as well. It's on a 3-day pullback. You know, it closed just below that 100-day simple moving average. It's trying to hold that level. You can see people were loading. You know, when you get the lower wick, that's people loading off of low day. It came down here, hit the $8 support zone. You know, it was testing that 200-day simple moving average. They were buyers, but they failed to get it back above the 100-day simple moving average at 860. And so as long as that level is resistance, you know, it could come back down here and test the 200. If that 200 broke, you know, that 300 could be on deck. And then once again, that October 29th low close. That is the downside risk. You know, if it got below that 200-day simple moving average, it failed to hold. Now, right now, it's trying to find support here in this 100-day simple moving average zone. And if it got above that middle Bollinger Band there at 865, you know, it could get a run going back up to that 50-day simple moving average at 1011, and to test that high close on the 7th. So yeah, so Cronus is trying to hold up here. It's going to be all about, for all these stocks, getting above the middle Bollinger Band, holding support, getting back above that 50-day simple moving average, and then that would be the big signal. Okay, cannabis is back. It's ready for that uptrend. Similar to back here in August, you know, when it was below the middle Bollinger Band, below the moving averages, and then when it got above on the 20th, that was a signal that it was ready to head higher. That's what you're looking for here. You know, it's been working on getting back above the moving averages, has to get above the top one, the green one, and that's where it could head higher. If it's trading below, it could consolidate. It would signal downside risk. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.